Oh my God, if I could go back and tell myself this, I would save so much time learning to day trade in the stock market. The first thing I would tell myself is find a strategy and actually stick to it. You do not need to reinvent the wheel. The market is already so complex. There's people that have figured out strategies that work. Just piggyback on them. And secondly, stick to that strategy. Give it time to work out and give yourself time to learn it. The market takes a long time to learn. You're not going to learn it in just a couple weeks or months. And I tell myself to day trade the S&P 500 futures because you can start with as little as $1,000 or less in your trading account and make as many day trades as you need. A lot of people think that you need over $25,000 in your account to actually day trade because there is a pattern day trading rule that is required for actually day trading stocks. But when it comes to futures, they do not have that. And so you can start trading with an extremely small account, which allows you to slowly build things up. When you first start out, you do not want to be risking breaking the bank and betting that you're going to make a lot of money right away because trading is just like mastering anything. Think of it trying to learn to become a nurse or doctor. It takes years to do that. You're not going to go watch a YouTube video on how to perform surgery and then go do it the next day. It's going to take years and years of practice to get there. Trading is very similar. And so what I've found is trading the micro ES futures to be extremely beginner friendly. You can start with extremely small trade size of, let's say, $20 to $50 per trade and slowly work your way up. You're not having to come out of the gate and risk a ton of money. Now, another big mistake I did was I actually demo counted for not long enough. I gave it a couple weeks sometimes and felt I was doing good and then gave a real money account a go. And in reality, just because you have a good week does not mean you're consistently profitable in the long run. The market has so many nuances and just different structures and patterns that it can be in. Sometimes for a couple weeks, the market can be moving extremely fast. And sometimes it can just be quiet and not moving at all. And so if you went from a couple weeks of really fast where you're making a ton of trades, and then all of a sudden the market just sits there doing nothing for a few days, you can get chewed up and lose all your money. And so you have to learn how to be able to switch between those on the fly so you're not giving money back in those situations. And as well with a demo account, treat it like a live account. If you're gonna start with $1,000 of real money when you give it a go, have your demo account start at $1,000 and have the trade size be what your trade size is. Don't go in a demo account that's worth $1 million and be risking $10,000 per trade because that's just not the reality. And it's gonna make that switch to real money even more challenging. And go into this expecting that you're gonna fail and that it's going to be hard. Nothing worth it is easy. Because a big mistake that I made was giving up on a strategy when I was struggling with it. I made the mistake of jumping from strategy to strategy because I thought, oh, this strategy just isn't working. And in reality, it was me not giving it time to work. And it was me not giving myself time to actually learn the strategy. When in reality, it's not the strategy that is the problem. It was me as a trader needing to hone my craft. And on that note, when it actually comes to honing your craft, the best thing that you can do to improve your trading is study your trades, both your winners and your losers. Keep a running journal of your trades, take pictures, do a weekly and monthly review of your trades. Even if you just had a really dumb mistake that say you'll never repeat again and you don't think it's worth journaling that, you need to keep track of all that because over time you will start to notice patterns in your trading. You'll start to know what patterns you're consistently being profitable with. You'll start to know ones that you're consistently losing money with. And over time, you can start to only focus on those trades that are actually making you profitable money and then take out the trades that are just consistently losing you money. In my case, a lot of the time that was being overly aggressive and trying to jump the gun when I saw a potential trade coming. Patience was my number one enemy when it comes to trading because what would happen is I would jump in a trade way too early when I was nervous that maybe I'd miss the trade, I'd miss the opportunity. And in reality, yeah, maybe I was spotting the correct area of, okay, the market's gonna reverse right here, but it needs a little more time. And when it comes to it, it's okay to miss an opportunity when you want to wait for the correct signal, because when the correct signal shows up, that is what you want to be taking. Taking 20 trades a week is not as profitable as just taking 5 trades a week, because in the long run, what actually makes you money is scaling up your account, not more trades. More trades is the trap to make you think you're going to make more money. When I first started out, I felt that, oh, my trade size is only $50. If I take 1 trade today, I'm only making $50 a day. But if I make 5 trades and they're all winners, wow, I'm making $250 that day. That seems like a lot more money. And yes, it is. But the likelihood of you being that profitable, that consistently with that many trades is less and less likely, because you're trying to force more trades. And when you take less trades, you are taking the cream of the crop, and they're more likely to be consistently profitable. Another massive thing that I would want to tell myself is have a really favorable risk reward. In the past, I've gone for something like 1-to-1 risk reward ratio, or even less, of risking, let's say 2 to make 1. And that is extremely hard to be profitable with. With those, you have to have a 50 or 60 or 70% win rate to be consistently profitable. And if you have a really good risk reward where you're risking 1 to make 2, 3, or 4, you do not have to be right very often to be consistently profitable. Trading is so hard, and the market is just always different. You cannot expect yourself to be right all the time. Half the time when I'm trading, even though I have a good strategy and plan that I'm following that works, every trade I get into, I am nervous and I don't think I'm making the right decision. And when I'm managing my trade, most of the time, I don't think I'm making the right decision, because in every moment in the market, there's always some really good reason that you just found miraculously at that moment that makes it seem like the trade might not work out. When it comes to actually trading and not looking at charts in hindsight, you never know what the right side of the chart can do. The market can always do crazy things, and making decisions like that and essentially just putting an idea out into the unknown with infinite possibilities of what the market could do can be really nerve-wracking, because you just never know whether you're right or wrong. And so learning to accept or just be okay with that feeling of constant nervousness is going to really help your trading. A big thing that I always thought was, once I have my strategy, it'll just be like, I'll just be a robot and I'll just see a pattern, enter, and exit. And to some extent, yes, that's true. But in the end, we are human and emotions get in the way. We're going to be nervous. We're going to not be feeling great one day. And that's just a part of trading. And so don't think you're going to overcome some of those emotions. They are always going to be a part of your trading. And so when you're going through the process of trading, just accept that those are going to be there and figure out the best way to move forwards with them. The other biggest thing is, once you start to get down this trading path, is go what feels like it works for you. Some people are really good with trading with the trend. Some people are really good with trading in choppy markets, and some are good with trading reversals. I, over time, figured out that I feel really comfortable trading only reversals. I don't care if the market's just going straight up. I will wait until the market hits a resistance level and then bet that it's gonna go back lower, because for me, I am just a contrarian when it comes to the market, and I can consistently get really good risk reward when it comes to these levels. I can risk $100 and maybe get $300 or $400 on my trade consistently, which allows me to not have to be right very often. And when I am, I get paid handsomely for it. So if you want to know more about trading, check out this video right here. And if you want to just learn everything I know about trading, check the link in the description below.